My name is Anthony, and this is another edition of Financial Markets. I'm together with Victor, and we are still getting to look at, first of all, the winding up of the business here at the Uganda Securities Exchange. Remember, USE or Uganda Securities Exchange opens at 9 a.m., opens trading at 9 a.m. and closes at 1 p.m. East African Standard Time. So as I speak, stockbrokers are doing their roles, they are trading, they are of course getting ahead with the business of the day. And if you want to be an investor, you should be reaching out to some of those big guys in the stock brokerage firms to get you some stocks. But first, you must open an account, which is called an SCD account, or Security Central Depository account, for you to get access to the shares. And then later on, reach out to your stockbroker to be able to buy some of that stock. What do you have for us, Victor, as we wind down USE?
Well, the performance trends for the indices, the market indices, in brief, over the past week, the Uganda Securities Exchange Local Company Index experienced a loss of 0.28%, a 4-week loss of 0.93%, and a year-to-date gain of 2.21%. So this mixed performance highlights the need for a really nuanced analysis of local company dynamics. And of course, we're noticing that the local company index is showing some remarkable performance compared with the all-share index, and at least it goes to show us that the local companies are doing something to improve their efficiency in profitability and output. But in conclusion, yesterday's trading session on the Uganda Securities Exchange demonstrated a dynamic market, and looking at it, we can actually say it was characterized by significant changes in trading volume, turnover, and individual. While certain stocks experienced appreciations, others actually faced depreciations, and this is all contributing to the mixed market sentiment. And the performance of the key market indices also actually further emphasizes the need for a comprehensive understanding of both short-term fluctuations as well as long-term fluctuations. So investors and stakeholders should closely monitor these developments to make informed decisions in the evolving financial landscape of the Uganda Securities Exchange. But as we come from the Uganda Securities Exchange, we want to set our eyes on the Nairobi Securities Exchange as well, it being a major player in East African market landscape. So Anthony, what do you have as per the Nairobi Securities Exchange?
Well, Nairobi seems to be green, and this is based on their performance after the all-share index climbed by almost 0.37 points up to 90.76 points. Nairobi is the busiest and oldest market in East Africa, dating way back in 1964, and indeed one of the massive markets here in Africa. Now, on the second day of trading this week, Tuesday, the 21st, Nairobi Securities Exchange witnessed at least 97 million Kenyan shillings at least traded, and this was a 47% improvement in the volume and a 47% improvement as well in the turnover, whereas the deals as well improved by 10%.
Smart 24, driving business. Smart 24, driving business.
Taking a look on the flip side, we're actually seeing experiencing the most significant decline, with its share price depreciating by a whole 8.17%.
Yeah.
So this left it at 219.25 Kenyan shillings per share, and it was followed by Olympia Capital Holdings, Everyday East Africa, and Uchumi Supermarket also recording losses of 6.9%, 6.15%, and 5.56% respectively. So notably, the diversity in the performance of individual equities actually reflects the dynamic nature of the Nairobi Securities Exchange, and this is offering opportunities for both gainers and losers across the different sectors.
Yeah, well, let's looking into Captura Tea Company. You know, one of the things that excites me about Kenya is the fact that they have this diversified scope of companies where you can. One of them is Captura Tea Company. Yes, they were the bottom loser yesterday, but looking at this company, it's a cultivation and seller of tea. When you look at the company's area so far, they have over 661 hectares of tea, and during the fiscal year, when you look at the year they listed in 2000, way back in 2002, they had at least over 365 kilograms that was tea that was actually being produced by the company in the estates. Now, when you look at the current market capitalization, the company has a market capitalization of 1.72 billion Kenyan shillings at the moment, which makes about 0.121% of the entire Nairobi Securities Exchange equity market, and that is currently what we're seeing on the standard 7.28 million shares and 1.72 billion. In terms of trade, they are the 49th most traded on stock on Nairobi Securities Exchange, and over the past 3 months they have traded at least a volume of at least 54,000 shares and value of at a value of 11.7 million Kenyan shillings. That is the turnover within the period. Now, when you look at this as a small company and a company that is one of the least traded on stocks, but it's still putting up a fight against the big giants like Absa, Safaricom, and the rest. And I think this would be something that most of the African stock exchanges should buy into, and USE has already actually started something similar. We did have a growth enterprise market segment where we had small and medium enterprises that are cropping up to become, you know, big entities that could be listed on the main board. However, when they are brought closer to the investor through a growth enterprise market segment, they get an opportunity to see and witness the things that happen on the stock market, and that gives also opportunity to investors, small investors, to be able to invest, because at least their stock prices are much lower and they are having a much more affordable stock compared to their counterparts. But they also have very quick movements. Because of the small price, any slight movement in price has a very high impact, and so you have the percentages going up, and that gives you, for new investors, it gives you the frenzy of what it's like to invest in a busy stock market, which is, I think, something that is very, very fascinating.
Well, we're in a fastly developing kind of era, and before we stepped into these years of a lot of technological advancements, investors particularly had a fear of investing in agriculture related equities, and it's because they work on seasonal earnings, seasonal profits, and you can never be sure anything can happen. There's a lot of uncertainty within that particular market. That is why I don't know, but you can look at the numbers and tell, even with the year-to-date performance, that there's a little bit of a biased reaction in terms of investor sentiment, and you can clearly see that within Kenya, companies like Captura Tea and all the other companies that are basically focusing on agriculture are not given that much attention because investors have a certain fear.
Absolutely.
But looking at the Uganda Securities Exchange in this case, we don't really have any company focusing on agriculture. agriculture.
Yeah.
But if we did, as the country having agriculture as its backbone, I feel like it would be the opposite. A lot of eyes would be set onto that company to see how much and how far it can actually take agriculture with the kind of capital backbone like it being listed on the Uganda Securities Exchange.
Now, I agree, Victor, and I couldn't agree more. Sector-based listing is one of the best ways to improve the stock market. It's not a matter of, now let's take a look at the telecommunications industry right now. It's already growing because of the fact that 2 big telecoms are already listed. Now, if we go into agriculture, like you mentioned, which I don't know if it's still the backbone, but I think it would still be, given the fact that we are coffee producers, tea producers, and so on. If we had some of these enterprises listed, it would not only help them get recognition, but it would also help them get capital. The first and primary role of the stock market or capital market is raising capital, and that is why in the first place we have the stock market actually cropping up in the early 1600s. To raise capital, people couldn't find better ways to raise capital. Now, if these companies that are dealing in the sector, which is the backbone of the country, are raising capital, it means there are going to be massive investments. There's going to be mechanization of agriculture. There's going to be pest control. There's going to be absolutely huge amounts of production and productivity. And the higher the productivity, profitability is also going to go up. Taxes are going to grow because then the tax base is growing, right? And with more exportation, we're also controlling the forex, right? We're bringing in a lot of forex, and our currency is going to grow stronger. So I do believe you have a very good point there. And the Capital Markets Authority, I think, is putting efforts in this direction, but they should even look more into sector-based listing and look at which sectors really in Uganda do need listing. I think the companies like, I don't know if I'm allowed to mention, but Rwenzori Tea, for example, they have spent years, Mukwano Tea in Uganda, and some of these companies should be listed, I would say, because with listing, they will not only raise capital, but raise their recognition, and then productivity will go up, and as well as improving the whole macroeconomic outlook of our entire economy in Uganda.
And a lot of agricultural-based entities in the country are also backed by their reputation because they have existed for much longer than most of other companies in other sectors.
Absolutely.
But, well, shifting our focus back to the Nairobi Securities Exchange, looking at the top traded stocks, we have Safaricom that dominated the trading floor with the highest volume, recording about 4.62 million traded shares. We have Kenya Power and Lighting Company. We have Cooperative Bank of Kenya, followed suits with volumes of about 2.9 million and 603,200 and 361,500 respectively. But the high trading volumes of these stocks actually indicate their popularity among investors in Nairobi or in Kenya at large, and of course highlight their influence on the overall market activity. But shifting focus to the market indices and their particular performance, the benchmark index exhibited a positive trend, climbing about 0.37 points. That is about 0.41% to close at about 90.76, and this represents a noteworthy one-week gain of 1.58%. And although we're seeing a one-week gain, we're actually seeing a four-week loss of 1.97% and a year-to-date loss of 28.8%. So it actually underscores the challenges faced by the market under broader timeframes. But other market indices also displayed positive movements, and the 10-share index recorded a 0.59% increase, reflecting 2.28% gain over the past week, but still reflecting a 7.46% year-to-date loss. And the 20-share index and the 25-share index also rose by 0.63% and 0.33% respectively, leaving us with the one-week gains of 2.28% 1.6% and 1.95% respectively. But the both indices actually continuing to experience a year-to-date loss or year-to-date losses of 11.53% and 23.97% respectively.
Yeah, looking at Safaricom, when you look at Safaricom's release last week, the financial statements for the third quarter 2023, Safaricom shows a group service revenue grew, that the group service revenue grew by 9.9% year on year to at least 159.1 billion Kenyan shillings, and that is a 9.3% when you, of course, adjust to mobile telecommunications rate impact. It was mainly driven, according to Safaricom CEO, by the M-Pesa or mobile Pesa and mobile data revenue streams, which rose by 16.5% and 12.5% to reach 66.2 billion and 66.2 billion and 29.6 billion respectively. When you look at Ethiopia, remember Safaricom opened up an Ethiopia branch in Ethiopia operations during the operating period ended September 2023. Safaricom launched the mobile financial services in Ethiopia on the 15th of August 2023, and since its launch, M-Pesa in Ethiopia has onboarded 22.7 thousand agents and 11.7 thousand merchants as well, and has integrated at least 7 banks with the bank to M-Pesa and 9 banks with the M-Pesa to bank services. Safaricom Ethiopia targets to break even on EBITDA basis by financial year 2026. That's when we expect the very first profit to be registered by Safaricom Ethiopia. So far, the gross funding by shareholders in Safaricom Safaricom Ethiopia since inception totals to at least 1.6 billion US dollars out of Safaricom's funded 833 million or 51.6%.
Well, with all that said, we would also not want to leave the Nairobi Securities Exchange and everything that falls within that particular bracket without highlighting that Kenya fuel, electricity prices, and the Kenyan fuel and electricity prices are actually expected to rise within the coming days, particularly months, or within our shift into 2024. But with the recent highlights, we're actually seeing the Kenya fuel and electricity prices are set for a fresh increase on proposed changes on the law to double a levy charged on the 2 products to support the operation of the sector regulator. But the company's statute law, or the miscellaneous amendments bill of 2023, has actually proposed to amend the Energy Act of 2019 by doubling energy and petroleum regulatory authorities levy to a maximum of 1% from the current ceiling of 0.5%. So actually delete the phrase half of a percent appearing in the paragraph of Article A of the Section 20 Part 1 of the Act that says the bill read by a majority leader in Parliament, Kimani Ichung'wah.
Yeah, currently Kenyans are paying at least 0.25 Kenyan shillings per litre. That's close to what Ugandans are paying as well on petrol and diesel, as well as kerosene, a petroleum regulatory levy. They are also paying at least 0.08 Kenyan shillings on each unit of electricity as EPRA levy. The 2 levies form the backbone of the regulator's annual revenues. In the financial year ended June 2021, for instance, EPRA netted at least 1.2 billion Kenyan shillings, and that's 7.9 million US dollars from the petroleum levy, compared to at least the 1.1 billion Kenyan shillings in the previous year, on an increase of 16.5%. It also earned at least 236 million Kenyan shillings from electricity levy during the period, and down to 10% on from at least 263 million Kenyan shillings. Now, these prices rising are not something that government has been able to support during the period, according to EPRA, and so the electricity and oil prices are are at least presumed to be rising, are going to be rising at least for the next series of months unless government intervenes.
Now, looking at all this, we will not forget that a few weeks back we have been seeing some sentences being exchanged with, about oil and fuel prices, particularly with the connection of Uganda receiving its fuel resources from Nairobi and the president of Uganda intending to cut the supplies coming in from Nairobi as we expect to start creating fuel of our own. What are your insights on that?
Well, I think the fuel issue, when you look at what we are doing, taking our fuel to Dar es Salaam and refining it there, that is unlikely to be a short-term solution for our challenges with oil. Like you're seeing the Kenyan prices rising, and yet almost all the trucks coming into, at least 90% the trucks bringing in fuel in Uganda are coming from Kenya. Very few trucks are coming in from Tanzania, and unlikely the price will change even when the prices are lower in Tanzania. But due to the distance from Dar es Salaam all the way to Uganda, that distance, of course, will have to be incorporated. The cost of that distance will be incorporated into the cost of the fuel. So I would say the best way to do it is to have our refinery at the end of the day. That's going to be the best way. If we have our own refinery, we are refining our own oil and selling it to the entire country. That would be the only way, and that's a longer, much longer term solution, I would say. But with the current situation, at least inflation in Uganda, for the other products, the headline inflation has been going down, and we're now currently below the 5% mark, according to Bank of Uganda, at rates of around 2.13%, and that is promising. That is promising. Besides, of course, the energy prices that have been going up.
So, in conclusion, with the Nairobi Securities Exchange, actually, while specific equities like Sanlam, Kenya, and Safaricom demonstrated strength, others actually faced challenges, as evidenced by share price declines. So, the positive movements in the market indices actually provide a glimmer of optimism, but the year-to-date losses highlight the persistent challenges facing the Nairobi Securities Exchange, as is any other securities exchange and operations within the financial landscape. But with that said, we'll be right back after a short break with more insights on the rest of Africa and news on other financial markets.
We are not coming.